Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. The Federal Reserve initiated an unprecedented interest rate hike cycle in effort to curb stubbornly high inflation. Since 2022, the Fed has raised its key interest rates 11 times from near zero to range of 5.25% and 5.50%. While interest rates can make it more difficult for households to pay down their debt, high borrowing costs are what makes real estate investment trusts, or REITs for short, like BrightSpire Capital Inc., traded on New York Stock Exchange under symbol BRSP, such a great opportunity. John?
Thanks, Mo. Well, the Fed has basically ended raising rates for this rate cycle and plans to introduce a number of cuts to interest rates starting in 2024. Borrowing costs are still expected to remain well above pre-pandemic levels for years, and these conditions should provide mortgage REITs like BrightSpire Capital with plenty of momentum over the coming years.
When people think of REITs, equity REITs are probably what comes to mind. There are a wide range of equity REITs. You can own anything from industrial properties to hotels, casinos, offices, healthcare, data center, and residential real estate. But there is another type. They're mortgage REITs, which are more often referred to as MREITs. Mortgage REITs invest in mortgages instead of real estate by purchasing or originating mortgages and mortgage-backed securities, earning income from interest on these investments.
Yeah, investors also love REITs because they legally have to return at least 90% of their taxable income to shareholders in the form of a dividend. Better still, REITs tend to perform well in a high interest rate, rising inflation environment, like the one we're in right now. So we're getting back to BrightSpire Capital. It's actually like a great MREIT that has turned the corner since early November. BrightSpire is one of the largest publicly traded commercial real estate credit REITs with $4.5 billion in assets under management. The New York City-based company originates, acquires, finances, and manages a diversified portfolio made up primarily of commercial real estate mortgage loans, mezzanine loans, preferred equity, debt securities, and net lease properties in the U.S. Now, of its senior mortgage loan portfolio, 100% of it is made up of floating rates. By property type, multiple family homes makes up 41% of the portfolio, followed by office, industrial, hotel, mixed use, and retail.
How did this company do in the most recent quarter?
I think it did quite well. For the third quarter ended September 30th, 2023, BrightSpire recorded net income of $12.4 million or 9 cents per share. Now that compares to a third quarter 2022 net loss of $20.5 million or loss of 16 cents per share. Distributable earnings came in at $31 million or 24 cents per share versus a distributable loss of $24.7 million or a loss of 19 cents per share in the same period last year. Meanwhile, adjusted distributable earnings were $35.8 million or 28 cents per share, and that compares to $32.3 million or 25 per share in the third quarter of 2022.
See that it declared a quarterly dividend of 20 cents per share.
Yeah, strong dividend coverage allows BrightSpire to continue to reward investors with a pretty reliable high-yield dividend payout. On December 14th, the company's board declared a quarterly dividend of, as you noted, 20 cents per share or 80 cents on an annual basis, and that works out to a current yield of 10.4%. Now, BrightSpire has paid a monthly dividend before the 2020 health crisis. It should be noted that BrightSpire suspended the payout in the back half of 2020 and into 2021. But in March of 2021, it switched to a quarterly payout. This move actually coincided with the company rebranding itself and changing its name.
Looking at the BrightSpire stock price, it has taken off.
Yeah, BrightSpire reported solid third quarter results on October 30th, but its share price didn't really respond. At the time, management said it remained focused on maintaining high cash balances until market conditions improved, and that includes the interest rate environment. And it did. Just 2 days later, the Federal Reserve announced it was once again pausing its interest rate hikes. It also hinted it was done raising rates. And then in mid-December, the Fed announced it was holding its key lending rate pat, and that it was essentially done raising rates for this cycle. On top of that, rate cuts are coming in 2024. It was just really the kind of holiday message investors and MREITs want. Now, if you look at BrightSpire's chart, you can see that it's been trending considerably higher since the start of November, rising more than 35%. Now, as of this recording, BrightSpire stock is up 22% over the last 6 months, 36% year to date, and 32% year over year. And even according to conservative Wall Street, the BrightSpire shares still have room to run with a median 12-month share price forecast of $8.50
John, thank you so much for your analysis. Just to recap, BrightSpire Capital Inc. is a great REIT with a diversified portfolio of commercial real estate with floating rate loans. It continues to report solid financial results and provide investors with reliable high-yield dividend. Thanks to improving macroeconomic condition, the outlook for BrightSpire Capital remains bright. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on our top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.